First video deep dive. We've got Saskia Albers, co-founder of Unhedged. Saskia, thank you so much for being part of this new series.
I'm very excited to be the first to do this. Thank you.
Excellent. Good. Saskia, I can see the background, Unhedged, for the viewers out there. Can you tell us a little bit about the history of Unhedged and how it all began?
Excellent. Yes. We started about 2 years ago now, and it was really the idea of Peter. Peter is the CEO and co-founder. He is an excellent quant. He created algorithms that can invest on the stock market. Basically, these algorithms analyze the whole universe of the US market and make trading decisions based on that. And he thought, well, that's great that I have found them, but how can I share this with more people? And hence started Unhedged. So the purpose of Unhedged is to create equal wealth opportunities for everyone. Quantitative investing and algorithms to invest is not new. They're out there mainly covered up in hedge funds. Hedge funds, you need to be pretty wealthy to actually get a foot in the door. You need to bring a whole bucket of money before you can get these quants to work for your money or on your money. And Peter thought we can do this better and cheaper to make it more available to everyone. So that's how we started Unhedged. And I came along for the ride.
Excellent. When it comes to investing in unhedged and hedge funds and wholesale funds, you generally need to be a sophisticated investor here in Australia. Is that the case with Unhedged?
No, so not at all. So right now we have a very simple app that anybody who is an Australian resident can download in the App Store. That way. So yeah, it's available for any retail everyday investors.
Fantastic. In regards to won't go into the intricacies of the secret sauce behind the algorithms, but when people sign up to Unhedged and they get a performance like you've talked about, and it potentially beats the market, what sort of asset classes are Unhedged investing in?
Yeah, so right now the 3 algorithms that are live are all investing in the US market. We have very plain vanilla stocks, bonds, ETFs that these algorithms invest in. So they're all retail friendly. There's nothing exotic in there. Yeah, it's a very broad-based strategy. And the 3 algorithms that are live are also designed to work together. They're very lowly correlated together. And I think you might know that if you diversify, that's always a great strategy when investing long-term. So these 3 algorithms are designed to work in tangent. But obviously, we don't provide a financial advice, and our customers can select in the app how much they want to allocate to each of these algorithms.
And then when it comes to the reporting and the transparency about how and where my money's gone, what's the process there, and how do you educate people into saying, oh, well, that was a good quarter, and why was it a good quarter?
Yeah, so we do report every month on our algorithms to our customers. Obviously, in the app, we have an overview of the portfolio. There's more functionality coming in there shortly that will show exactly for each algorithm how they are performing against the benchmark. Right now, we just publish it on our website and through those newsletters. And we also show in the app what the assets are that we've bought, so which holdings a customer has, so they can actually sort of explore what kind of assets they have invested in. And I need to say as well that we have 2 new algorithms coming up as well. So you can see that our quants continuously iterate on new algorithms. So there is an ESG algorithm coming. We really call this a climate impact algorithm because our quants found a very interesting correlation between companies who are actively reducing their carbon footprint and their share price. So they're going to use the reduction of CO2 as a trading, like the basis of a trading signal. It's obviously more complicated than that, but that's a really good way to actually make sure that you invest in a company who's actively doing better than what they did yesterday and actively helping in the challenge that we're facing of climate change. So I'm very excited about that algorithm and when that launches. The second algorithm that we're launching is a crypto-like algorithm, which is also quite interesting because when people think crypto, there's obviously a lot of volatility, and it might sound scary for some people. But actually for algorithms, there's a lot of additional data available for crypto, so they can use that data to quickly decide when to be in the market and when to actually be out of the market. So in that sense, algorithms are very well tailored to invest in crypto. But on top of that, obviously there is still yet a lot to explore in terms of regulatory requirements, in particular in Australia, on how to invest in crypto. And there are assets that you can buy in the normal traditional finance world, so on the normal stock markets, where you can mimic the price changes that you see in crypto. So basically we use the data from the crypto world and buy and sell assets still in the normal good old US stock exchange.
Yep, and you mentioned there buy and sell. I mean, the algorithms are a process to take profits or losses when necessary, as opposed to just being a long-only fund.
Correct. Yes, absolutely. So on average, we hold an asset in our algorithm for 18 days. So it's an active trading strategy, but for the customers of our app right now, it's actually pretty passive because they only decide how much money they allocate to each algorithm, and then the algorithm actually does the trading for them. So it is also comparing to other investment strategies out there, and in particular other robo-advisors who use a static rebalancing methodology. So every so often they go back, look at the portfolio, and a human makes a decision to see whether they need to change. But that's not as quickly as an algorithm might decide, and it's also limited by their investment strategy. So if it's a technology-only fund, then obviously during COVID or technology stocks were on the rise and everybody was making a profit, and it was great. But as soon as markets turned and some other sector came into flavor, those funds have seen massive losses, and customers are then too slow to realize that, and the fund manager is not going to say, please leave our fund because our investment strategy is not the smartest anymore, and all of a sudden there you are, too much loss. So we think that a very broad statistically based algorithm is much quicker and can just adapt to market changes much quicker.
Yeah, and the feedback that you've got from your users thus far, I mean, I'm thinking out aloud here in regards to the new algorithms that are launched. Would that be do you think customer-driven style, purpose and values algorithm, and a customer suggesting, hey, actually, I'm not too comfortable with some of the stocks or bonds, etc., that you're investing in this one, but if you did this one, then I'd certainly put more money into it.
Absolutely. Yeah, it's good that you asked, because that is the main reason. So obviously we've asked our customers, what are the reasons, like what would make you invest more? And the very first answer is if the markets go up. I mean, that wouldn't we all like that? Market conditions I obviously can't change. But the second they're asking for is ESG and crypto. So that's what we're delivering.
Excellent. And in terms of the customers, can you talk about the number of people that have joined the app and in terms of the longevity of how people should, in your view, hold the unhedged algorithms, and should they be chopping and changing the algorithms along the way? Yeah.
So right now we have over 5,000 users of the app, and sort of as I mentioned before, the algorithm does the active trading, and for the customer, it's just a matter of setting their allocation and then to their risk profile, and that's really the only change they have to do. They might want to reset it to their allocation if there's been a bit of drift, but that actually only is pretty slowly over time. So we don't give advice, and people should look at the algorithms themselves, their legally investment options, and see which of them are how much they want to invest in each. But all three of these algorithms are focusing on a longer term horizon of 3 to 10 year. So they're really investment algorithms, and not necessarily high frequency trading algorithms or any of these types of quantitative methods that you've seen more likely in hedge funds as well. So they're much more tailored for longer term investing than short term gains.
And let's talk about the future of Unhedged. If we sit here in 12 months' time and repeat this deep dive interview, and we go back and look at this video, where would you like the business to be?
Yeah, well, I'd like us to have a couple more partners live, so that we just expand the reach of people who can use our algorithms. Yeah, I hope that Unhedged is a brand that is very well established and known in the Australian, but also overseas markets, so that yeah, a lot more people can leverage and get equal wealth opportunities.
Fantastic. Just thinking about one more question in regards to the performance. Like you might have a really good month or a really good quarter. In your view, how do you sort of smooth that over to say actually Unhedged is a good place to be in terms of track record and what you're thinking in terms of performance?
Yeah, well, I mean, on our website we show so the algorithms are trained on very, very long term backtest. So on our website, there's a 10-year backtest that shows what our performance has been over, or what our hypothetical performance would have been over that time, I have to say, because obviously we weren't live back then. Yeah. So yeah, it's just really good to look at all of the months available that we've been live, and how much we've outperformed the benchmark. So right now we really we compare ourselves to what the market is doing, because as you can see, when markets go up, everybody is a genius and everybody writes up because there's much more money to find. But in a volatile time like these, that's when you really see the difference between fund managers and who's actually outperforming compared to the market. So I think it's always wise to look at any performance when selecting a fund manager, just compare it to the market, because that is what you would do if you just if you buy a very broad based ETF.
Yep, no, fantastic, Saskia. Thank you so much for telling the Unhedged story from the beginning to where you are now and the future, and well done, and congratulations on launching those 3 algorithms, but another 2 to come, which will be eagerly watched in terms of the performance and what you're investing in, and really look forward to catching up.
Excellent. Thank you so much.